Good morning, everyone. Welcome to my lesson today. Today, I'm going to talk about money and banking. After we finish this course, the course outcomes are as follows. We are going to be able to identify different functions of money and how money is related to interest rates. We are going to understand how interest rates are determined as well as the behavior of interest rates. We are going to demonstrate the importance of financial markets and financial institutions. We are going to identify the essential operations of depository institutions, justify why they are heavily regulated, and we are going to explain how nations' money supply is determined and know the various tools of monetary policy, the role of central banks and Federal Reserve System, and conduct monetary policy. A required textbook that I usually use for this course is Money and Banking and Financial Markets, 5th edition by Sacchetti, Stephen G., and Shohos Kevin. I like this textbook because it's very detailed. Functions of money. Money is used as a medium of exchange. Money can be used for buying and selling goods and services. Money is used as a unit of account. Prices are quoted in dollars or whichever name the currency is called. Money is a store of value. Money allows us to transfer purchasing power from present to future. It is most liquid of all assets and convenient way to store wealth. Money supply. We identify what backs up money supply. Money has to be supplied constantly. The following are the features that make money supply constant. The government's ability to keep value stable provides a backing. Money is a debt. Paper money is a debt of the Federal Reserve banks in the United States, and checkable deposits are liabilities of banks and thrift because depositors own them. The value of money rises not from its intrinsic value, but its value in exchange for goods and services. So goods and services have to change hands for money to be stable. It has to be acceptable as a medium of exchange. The currency has to be legal tender. Money purchasing power determines its value. So the money purchasing power has to be strong and it has to compare against other currencies. The value of money has to be maintained, and the government tries to keep supply stable with appropriate fiscal policy. So if a particular government's fiscal policy fails, its money fails to remain relevant. Let's take a look at the demand for money. There are two components that affect the demand for money: transactions demand and asset demand. What is transaction demand? Transaction demand, always referred to as DT, is money kept for purchases and will vary directly with GDP. Asset demand is money kept as a store of value for later use. Next, we are going to take a look at recent developments in money and banking. There is a relative decline of banks and thrifts, consolidation among banks and thrifts, convergence of services provided has made financial institutions more similar, globalization of financial markets has made significant integration of world financial markets, and this is occurring, and recent advances in computer communication technology suggest that the trend is likely to decelerate. How do banks create money? Money creation happens in two ways. The most common way banks create money is by accepting deposits. Let's say an individual or a firm deposits money with a certain bank. The bank may decide to lend that money out for interest. Out of the interest that the bank earns, it shares little of that with the initial depositor and keeps the rest of it. This happens on daily basis with banks, and that's how banks make money. Banks don't print notes and coins, but by engaging money in exchanging hands, they create more value and more money. Another way that banks make money is by making loans. Banks loan people different amounts of money, and these monies earn interest. That's how banks multiply money. I will come to the end of this lesson today, and in our next lesson, we'll go into details and see each of these factors and see how money and banking is related. Thank you for watching.